Okay, welcome back to episode 4. So in this episode, I'm going to discuss the weekly chart and how it can be used for continuation or reversal plays, and also how you can trade the weekly chart, just like I just showed you with the daily chart. So if we look back through price action here, so when we've zoomed in to our weekly chart, leading on from the first episode, so we're looking at the beginning of a trend. So at this point, we don't know that it's the start of a new trend, as we're ideally looking for price to head back to the range. So we're just looking for price to head back into this point at 1.15. After 1.15, it now becomes we're in a bullish trend. So how could we have entered this trade, and what kind of structure do we look for? So when we're coming down to that weekly chart, we can see reversals start to come in. So what happens in weekly reversals is you can see we've got 1.05 as our key level. So 1, 2, 3, even 4 occasions here, we failed to break below. We had a large influx of buyers step in just before that sell-off. So at that time, we'd be looking at that is our A, down into our B leg, which would be right here. And you can see all we had was a pushback up at first into that previous support, now resistance, which obviously came right near our take profit. But if you look at the price action now, and more importantly, the structure, so you see we have what I call the rejection wicks. So usually come in 2s or 3s, but the more rejection wicks for me, the more it's pointing to price is going to reverse. So you can see 1 week, 2 weeks, 3 weeks, 4 weeks. So from this level here at 1.03642, we couldn't break below for the next 3 weeks. We couldn't hold and close because that would mean we're going to continue bearish. What happens is we get that relief rally price. Now, if it can't go lower, has to do what? Move higher. Then you can see we have a natural healthy pullback. So when we look at our A, which would be our lowest point, to B, which would be our highest point, we can see we've done what? We've come and retested 1.05. And again, you see the rejection wick step in again. They're always evident in when markets are going to reverse. So you see again the rejection wick step in, and we've got our indication that price now wants to reverse. So you see here 1.052, 1, 2, 3, nearly 3 weeks price can't get below. So if price can't move down, what happens? Price will move up. And then what you start to see happening is price is now creating what I like to call higher highs and higher lows. So now you see our structure is now starting to turn bullish. So what we're looking for again is a natural pullback before price makes a high. So you can see the way structure now is turning bullish. If we have a look at our pullbacks from our fib, so we use our lowest point, which would be here, up to our highest point, which would be there, then you can see this time we have 74, 78.6. We also have another reversal pattern. So we map out that low there, and you can see again, price fails to close below. We also have this nice reversal pattern here. So we also have this nice reversal pattern there, and then we see price move higher. Because of news, we see that gap, and this is what leads you into, for example, a bullish channel. But we're going to get into that, so you can see the higher highs and higher lows being made. So that's something that's going to be covered in later episodes. Then you can see right now we come right back up to 1.12, and we have a bit of consolidation. The reason we're having consolidation is because buyers are now wary, can price break through this region. The reason being that rejection wick shows that there's a lot of sellers in that area. So there's a lot of sellers in that region. So it becomes a wary point for buyers. So you see we had a strong push up to that area, but our key level where we're looking for rejection starts to come in around this 1.14 area. So we had a little pause in the market again, and we see the same thing happen again. So like I said, price always leaves clues. We have a low which price is failing to close below. 1 week, 2 weeks, 3 weeks, 4 weeks. So if price can't move lower, because naturally we wanted to look for a pullback, so we would have been looking for price to pull back into a nice healthy pullback, would have been back into 1.1, and then we would have been 100% looking for longs up into the target, as you can see. But on this occasion we got a 38.2 pullback, which is obviously fast and aggressive, and then you've seen price continuously shoot straight back up. We then had another pause before what price rallied again. So when we're looking at our weekly structure, we're looking at that is our lowest low from where price rallied up to. We didn't really get any sort of significant pullback. So this is a extended bullish rally, and then we have that B leg comes in where we start to see price retrace back down. What do we see now? We get the same thing again. We get a level where price now fails to close below that level. We had our reversal pattern here. Price fails to close below again. So on that weekly chart, you'll be looking for longs around here with stop loss below 1.157. We then get further confluence in the form of a higher low being made. So you see price from the low up to the high. We pull back down into where? Not random. Key level 1.175. Look at price again. That first rejection, we can't close the next week. So the next week after that turns bullish. Another reversal pattern in the middle of that 3 pattern reversal. We break above. Do what? Break above 1.2. Have a bit of manipulation to the downside to come and retest this previous support turn resistance, and price expands again right back up, even in this pattern here between this A and B. That's more of a daily fib, but you see we pull back 38.2 and right back up into our targets up to 1.125. so look at the accuracy of our fib, so you can see it's not random again, like I stressed. So our level now of invalidation for me moves up into here, but reason being why it moves again is because now we're looking at this. So we're saying to ourselves, price now right up into that high, we pulled back of 61.8, so now we should be technically making a new high. So our level of invalidation moves. This is where we shouldn't see price get below if we're going to continue to move higher. So understand the continuations and the reversals. What do we see again? 1, 2, 3. So now it's the opposite side. We can't see prices rejecting to move higher. So we've made a high and price can't close above that level. Then we now dropped off again. Our next attempt is right here. We make a high, price what? Cannot close above that level. You can see the multiple rejections, even in this doji, the multiple rejections of price failing to close higher. So price action got very thin. But if price cannot move higher, what's going to happen? Price has to now move lower. So this is where you come in, like previously mentioned in our first episode, and we look for how is price moving, how are we going to know how to enter price. So once you've had that break below, your weekly trigger is here. You're now looking for price right here, and your stop loss would be just above that last week's high. You're now looking for your next target would be 1.175, which is your next mid-range, and if price continues, you're looking at your next target 1.15, continuing to hold, 1.2, continuing to hold down as long as structure doesn't reverse. So you can see at the most you would have had nearly 1,243 pips at a 7-to-1, and all you'd have been doing is holding that trade. So let's zoom back up again just to make you understand what we've seen. So we're right back up here now with the higher lows reversing. We've then broken through that level down to 1.7. Again, look, you see price fails to close, pulls back up, but once we get that strong close below, price does what again? Is failing to move higher. So you see the direction of the failures change from bearish to bullish. Now the bulls can't maintain the market. We make a high, price can't maintain above it. We then drop. We make a high again, price can't maintain above it. We then drop. That's the game that we're playing. Buyers and sellers just exchange hands. Here you can see we've got a strong range between 1.17. Let me just tidy this back up again. So let's take off our bearish. Let's take off our bullish lines for a second. So we just get more tidy. Just get, because we've changed into a bearish market now. So this is what we're looking at. So we had that consolidation. We made the high. Price fails to move higher. Drops. We make the high. Price fails to move higher. Drops. We had that manipulation. So you can see here we took out the lows. Had a strong close below. But we see price has a sharp reversal. So the wicks always indicate where we're going to go next. Then we pull back up. But we're still in alignment with our trend, our overall trend. As long as we don't close above that high, have a strong close, we're still in a bearish market. You can see again how accurate the levels are. 1.15, price rejects. So all it is showing me our overall momentum is to the downside. We've got a lovely perfect continuation pattern here, or reversal. So you see the way we've rallied back up. So from our weekly high down to our weekly low, you can see we had a lovely reversal candle there into 87. As long as we don't take out this high, we're still bearish, and we see price rally straight back down into 1.09 before we've seen a reversal. So the only thing for me now, when we're talking continuations, so I just want to make you understand continuations and reversals. So here we've got a strong downtrend in play. A very, very strong weekly downtrend in play. Lower highs, lower lows. But price ideally shouldn't break out. So we shouldn't see price break back out of this bearish trend. We could see a fake out, but we shouldn't see a higher low made. So that's why for me, weekly starting to show us potential reversals on euro, because what we see happen now is we had this lovely bearish market here. So we're just going down, up, down, but then we've gone up, down, and we look like we're going to continue up. And just based off the things I've just showed you before, let's have a look. We've got a low that what price is failing to close below. 1, 2, 3, almost 4 attempts. The weekly did not close below that low. So what does that tell you? We're now looking at potential reversals. So your first area where price would need to close above for us to maintain a bullish sentiment for me would be in this region here. The reason why I say that is this daily, so when we go into our next trade, this would have been our daily high, and you can see price now shouldn't get back above. For me, this region here, or your absolute highest it shouldn't get back above, is here. So you can see all of our bearish invalidation levels, be it be a weekly or daily, which we'll go into. Price has now invalidated them. We've had a failure to move lower. We've broken through, broken to our second level of invalidation. We've had that consolidation. Price has dropped and made a higher low. We shouldn't have seen this. Price now, after this consolidation here, we should have seen price break, retest. So once we've seen that break, retest, we should have seen that continuation, break, retest, that continuation as price continues to roll over, but we didn't get that. We've seen price come back down to our key level and again show us a failure to move lower. We then had consolidation right here, which has led to consolidation, failure to move lower, failure to move higher, failure to move higher. Then we've had that close, a strong push. price has now come back again. Each low is getting higher. And now we've actually got a weekly close above 1.16. So for me, our next target is 1.125. And if we look at our weekly fib that we apply, our target is where? 1.125. So now we understand we're in a long-term pullback, or should I say we're in a weekly pullback in regards to our overall bearish trend. So we've had that A, B, so overall the monthly bearish. So monthly invalidation is above 1.1, 1.14. But on a weekly daily view now, we've broken that weekly structure. We've created that higher low. So now we're potentially going to make a higher high. So you can see the way structure is now playing out. So we've had A, B, C. So we might see, for example, price get up to that 1.125, pull back down into this 1.10569, and then create another pullback up. In that time, this is what is creating what we call that bullish channel, or that bullish channel with the higher highs, higher lows, which again, like I said, we'll get into later on. But right now you can see Euro is showing you it's got willingness to move higher. So the next target you'll be looking at is 1.125. So you just have to be aware of how structure changes and what should be the signs when structure changes. So we're going to have a look at our daily chart and see what kind of clues the daily chart can give you as to getting in on actual trade setups and how to enter them, which can turn into other trades at 4 hour and 1 hour as we get more precise as we continue our top-down analysis. So I hope you enjoyed this video, and welcome. Stay tuned for the next episode.